The data that we got kind of just showed what we've been seeing, which has been a steady, stabilizing labor market. The Fed can continue to remain on hold and focus on their inflation mandate, and it would just put more emphasis at this point on inflation prints.
Wages, the information that we got yesterday is clearly showing that it's gradually slowing. And even though unemployment rate went down, it seems that was largely related to the participation rate. I think the Fed may afford to wait and see for more information before acting.
A sharp slowdown in the U.S. jobs market easing investor worries about a Fed rate hike anytime soon. But Asian markets remain focused on risks around the AI trade. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Asian stocks swinging to gains today with Korean and Japanese chip makers reversing early declines. Treasuries ending the week with lower short-term yields on soft U.S. hiring and lower oil prices. Invesco Asia Equities Fund Manager Fiona Yang joins us to explain why she thinks the AI trade isn't over, but is simply becoming more selective, with parts of the market getting stretched. Now, President Trump doubling down on efforts to fire Fed Governor Lisa Cook and make way for his own pick. Sources say former Chair Jay Powell also remains a White House target. Plus, India and Japan agreed to deepen cooperation and reduce their dependence on China, with Prime Minister Takaichi in New Delhi for her first official visit. We'll get insights and from former Indian ambassador to Japan, Deepa Gopalan Wadhwa. A frantic trading week for Asia is coming to a close, with stocks in the region swinging from losses to gains. That's as traders weigh that softer than expected jobs data out of the U.S. and growing concerns that the AI rally has run ahead of itself. Avril Hong is watching the markets for us. How's the Friday looking?
Friday is looking really choppy. I mean, you look at the Nikkei, you look at the Kospi gains and losses within the session, and I think the mood is brightening a little bit. This is helped by the S&P 500 futures, but there's no obvious catalyst. And I think this speaks to how maybe investors are bottom fishing. You think about how the stocks, the Kospi, they've been selling off for 2 sessions, right? So maybe the dip buyers are dipping into the markets, and we also see maybe investors are taking the glass half full approach when it comes to the US jobs report. That's not to say that we have been lacking in terms of tech news out of the AI space. You think about how this week alone, this really reignited this debate after a really good first half. What drives things in the second half? You're hearing from Meta, from Apple, Samsung, Anthropic, SoftBank as well, right? How much AI compute do we really need, and are we running up into the peaks of the memory cycle, especially if some of these players are looking at diversifying their sources of chips? So my point is, I think in the first half, very good. Second half, a bit of a question mark. There's no clear narrative for the moment. Maybe AI monetization is going to see increasing importance at a time where, if you look at some of the momentum kind of indicators, especially for US tech after a pretty historic run, it's stalling. So traders, I think in the second half, are going to have to work a bit harder to keep track and stay ahead of that incremental change in the AI trade as it evolves.
It is also about the Fed, about the dollar. With weaker than expected data, then the dollar is not going to be that well supported. So that's playing in the FX space as well.
Yeah, I mean, we saw that no hire, no fire scenario, right? And then the plunge in the participation rate out of the US jobs report as well. So I think that is causing some doubts on the case for US exceptionalism. It's opening up a pathway for the slide in the dollar, the reversal from the recent bounce. So that's reprieve for a lot of these Asian currencies. You saw Fed pricing as well for the full hike going towards December now from October previously. So helpful for Asia currencies. You saw even a very interesting day yesterday on the yen, and today Katayama managing briefly to talk the dollar-yen handle below 161. But as our MLive colleague Mark Cranfield very astutely reminded us, that late April early May, the failure to drive things down towards 155 was really what opened the path to 162. So I think traders want to see more follow through. And then also Korean won, that's the other one that we're watching, right? Really weak given the foreign selling in stocks still. And then we even hear from Korean authorities, they're going to look to support small firms that have been hit by the weakness in the won. And of course, it's very interesting because next Monday, Korean won goes round the clock.
Keep a watch on those two currencies in particular. Errol, stick around. Our next guest believes the AI trade isn't over, but it's time to get more selective. Fiona Yang is a fund manager for Asia ex-Japan equities at Invesco. So, selective, what do you look at? I mean, what's the playbook for the second half of the year?
Yeah, I do think the first half, if we look back at the market, when we talk about last time in this studio, is you can really get a front seat with the AI boom by investing in Asia at a discounted valuation as compared to investing in the developed markets. But here we are. We bought the ticket. We are on the ship. I do think the ride will be a bit more turbulent from this point on. The first half is a lot of momentum driven. The AI tide pretty much lifted all boats. The second half for stock pickers myself is really about who is going to maintain that level of profitability as capacity expand, and maybe there will be demand volatility as well.
So who will maintain that level of profitability?
So I think it's a great question. So what we are doing in the fund is really expand from just looking at the memory cycle to more broad-based components, such as MLCC makers. They are the passive component makers. They have done amazingly well in terms of share price, but I do think the operating margin for these guys still have room to increase as they raise their product prices. And on top of that, we do think the ODMs, i.e. The likes of Honghai, Foxconn, they are really putting the server racks together. They will start to deliver more of the Vera Rubin racks in the second half that could potentially lift their margin, their profitability, and generating decent return on earnings to shareholders.
So Fiona, on the debate on the memory cycle, which part of the cycle do you think we're in?
I do think, at the beginning of, if we take a step back, look at what happened to the memory capex over the past few years, because we have been through a really tough period of profitability for the likes of SK Hynix, Samsung Electronics, as well as Kioxia. So rolling 2 years back, they were under-investing in future capex. And looking at 2026, because of agentic AI, the demand for NAND, for DRAM has just accelerated at a pace that no one really expected this to happen. So that supply and demand dynamics has resulted in this surge in memory prices. And where we go from this point is really, you look at the supply, every player is talking about they're going to increase capex, including in Singapore, Micron going to build a mega sort of manufacturing hub. So I do think capacity will catch up, and on the demand side, it will remain strong, but as capacity catch up, that pricing may not be as high as what we are seeing today when we are really in this tight bottleneck.
The narrative, though, has been going on for quite a while, right? What you speak of. What is it going to take to carry things through in the second half?
Actually, if you look at the supply analysis, at the beginning of the year, people expect about mid-teen supply growth from all these memory suppliers. But here we are. Most analysts are expecting about mid-20s supply growth. Actually, that supply is already coming. And going into 2027, as some of the clean rooms get filled with more equipment, as well as even new clean rooms get built by this mega capex being announced by the memory makers. So we do think, as customers paying for such expensive memory for an extended period of time, they might take a pause and think about how much inventory do I need? Is the price going to decline? If there is expectation price going to decline in, say, second half of 2027, even 2028, they might just slow down the pace of building the inventory and just ease off that pricing hike that we are seeing at this moment.
In terms of the path for chip makers, how much more upside is there? Second quarter, 88% gain. Choppy third quarter, at least for the start. Are you expecting the same kind of pace or a slight pullback?
I think the volatility in the market is caused by both the fundamental as well as the technical issues. If we look at the market participation in particularly the memory space, there's a lot of double double leverage, triple leverage ETF. So that just exacerbates the volatility we see in the market. And some of these ETFs are the best-selling products on the planet, the best-sold ETF, leverage ETF, single stock leverage ETF for by a mile. So when there's any volatility,
when money is being pulled out.
Exactly. So whenever there is any, such as a meta news that just shake a little bit this off, then we're just seeing, the technical aspect to create more volatility in these stocks. So I'm definitely more mindful to look at what is market expectation versus what can be realistically achieved by this company.
Where is Korea? Where is the Korean market in all of this?
I think I do see Korea being more of a broadening out of the current thematic. In the past 12 months, everyone just obsessed with memory. We learned so many new things. I went to a lunch the other day, group lunch, and someone is asking me, "Are you a tech specialist?" Sorry, I'm not. I'm a generalist fund manager.
These days,
But then everyone talk about, MSCC, CPO, what do they stand for? Yeah. No one really knows, but they invest into those stocks. So I think in the second half, we will see more of a broadening out of the theme for both institutional investors as well as retail investors, particularly in Korea, as the companies start to pay out massive amount of dividend to shareholders, as well as the massive bonus to their employees. We will see them spending more in the local economy, and as the company's capex ramp up, we're going to see the bank's lending side get acceleration, and also the construction company getting more business to do. That will be just moving one narrative to a broadening out of secondary, tertiary sort of beneficiaries in the Korea market.
Does the capex plan we've heard from South Korea this week still make sense then? If you're talking about 27, 28, there are going to be question marks about inventory.
I think the AI trade is here to stay. The AI demand is here to stay. If you think about, the application of that, not just in the data center, but in the future, in the PC, in the smartphone, you need more and more of these things to really function for the AI applications. But then at the same time, will that be pocket of demand weakness? We're likely to see that. But from the government perspective, from the company's perspective, they can see the demand to rise in the future. They need to invest now rather than wait until 5 years later to thrive.
Do you see also that there maybe is increased impetus on the focus on AI monetization in the back half of this year? And then if so, what sort of early indications will investors be gleaning from?
Yeah, that's definitely one of the biggest concern, or every investor is just so sharply focused on what's the return on AI capex. I think that also explains why Asia, particularly Korea and Taiwan, are the major beneficiary of the trade at this point, because no one knows what's the return on this cloud capex. But what we know right now is Samsung is having a super cycle that enjoys super normal profitability. TSMC is just, there's not enough capacity to go around. They can ask for any price they want, and the customer will probably say yes. That's why the trade has skewed from, in the past you invest in the Mac 7 or NVIDIA, but now you're actually investing the pick and shovel stocks in Asia. I think that narrative might change, but it might take time because, this AI, the cloud capacity is coming up, and a lot of the players are actually competing on the same commoditized products. What could the potential return be, or what sort of large language model they can attach on top of that basic cloud services that really drives the return on investment for the Mac 7 in the US. And I do think with their capital return in mind, that they have just delivered exceptional growth as well as high return on investment in the past, the management of this company are mindful of their investment. If inflation is too high for the hardware, maybe and the return is not decent enough, on the other side, they might start to slow down the pace of construction, not
Fiona,
get away with it.
The other preoccupation in the market is actually Japanese yen, 162 and change, and now some kind of support, but that's to do with the dollar pretty much. I'm just wondering, what's the level you're looking at? Some say 165, and those who are really bearish go as far as 200.
I think the yen, a bit like Korean won, is also a positioning issue, not just a reflection of economic fundamental. If you look similarly in Japan, it actually benefited from similar sort of Korean benefit, a lot of tourist inbound as well as a tech cycle. So economy is actually doing quite well, but then there is also foreign capital outflow, and a lot of the Japanese companies are actually bringing money overseas to invest in other companies, like in India, the market that I look at, there are just so many Japanese banks trying to invest there. So that has determined the level of currency, but then from what we have seen at the payroll number, it seems there is less pressure for rate hike in the U.S. So that could help.
We heard some suggestions from Kevin Walsh that there is urgency to actually address the yen weakness. What does that necessarily mean? What action might be taken, you think?
Good question. Something that I'm watching as well, but I wish I have a crystal ball could tell you what is in his mind. But then if you look at a U.S. perspective, they just worry about export competitiveness. They want more of the products. They want the reindustrialization of the U.S. economy. So when they talk about that, they just worry, with yen being weak perpetually, that will just prevent some of the manufacturing capability being moved to the U.S.
Talking about manufacturing, in EM Asia, where looks like there's more opportunity now? I mean, we have Malaysian IT stocks, they're making a comeback, but also you have that cyclical narrative in other parts of EM Asia, given how oil is traded. What do you like, aside from AI?
I think manufacturing specifically, I think China still have a lot of room. I think in the past people talk about China plus and diversification of supply chain, and a lot of the companies that we talk to, eventually they realize China is still the most efficient with a cohort of supply chain companies, and the transportation is just logistics is just amazing and very cheap, so they can manufacture at the lowest cost in China. And also on the other side, on the demand side, right, the tariff is basically being implemented everywhere. China is not necessarily suffering from the highest tariff anymore, so that is less of an incentive for companies to move that supply chain out of China. Structurally, it's also robotics could help. If in China, the worry is we don't have more babies there, as a result there will not be enough labor in 10, 20 years time. Now we have robots, and China can probably manufacture robots like EV at a really cheap price. So if you don't want to work in a factory, that's fine. There are robots to work there.
Valuations are also cheap. What do you think is going to take for that mindset shift?
I think we were looking at a lot of manufacturing companies based in China these days. What could take the mindset to change is really they continue to deliver the earnings growth that they have been delivering over the past decade, and they prove to the market, to the consumers, that we have the cheapest products on the planet. Even if you impose massive amount of tariff on us or anti-dumping tariff on these companies, they can still do very well by bringing even their manufacturing plant to the US, which is difficult, but to Europe, that has just proven to be quite successful for the Chinese manufacturers.
And speaking about manufacturing, India wants to get in on the game as well, and India's fortunes are reversing right now.
I think in India, at least from the companies we speak to, it's still quite difficult to ramp up your manufacturing there, especially advanced manufacturing, just purely because of the labor force, because of the red tape to get the factory started, as well as the logistic. It's exceptionally expensive to do logistics services in India because of the infrastructure condition that we are seeing now, but it doesn't mean it won't change. I was just in Mumbai last month, and it just changed so much versus the last time I was there. The government is definitely working on that, and hopefully, if say another 3 years or 5 years later, we can see logistic costs to come down very quickly and become a manufacturing hub, not just for the domestic economy, but for the broader region.
Fiona, great insights. Thank you. Fiona Yang, Fund Manager, Asia ex-Japan Equities at Invesco, and our very own Avril Hong. Thank you. Now, President Trump and his allies are reviving efforts to reshape the Federal Reserve after the Supreme Court blocked a bid to remove Governor Lisa Cook. More on exclusive reporting next. Keep it here with us. This is Bloomberg.
Get her off.
How would you do it at this point?
By winning the case. They sent it back, not based on the merits, they sent it back on process and procedure. Mm-hmm. So we'll start the process and we'll do perfect process and perfect procedure.
President Trump discussing his plans to remove Fed Governor Lisa Cook after the Supreme Court this week blocked his efforts to fire her. Lisa Cook is far from being the only Fed board member to be targeted. Bloomberg has learned that top officials in the Trump administration and outside allies are actively exploring ways to remove other members and clear the way for more of the president's own picks. For more on this exclusive, let's bring in Bloomberg senior editor Brian Fowler. And Brian, it sounds like a purge, for a lack of a better word, but it's not going to be that easy.
Yeah, luckily, Haslinda, it won't be that easy. It's good news. The Supreme Court's ruling is a positive, I think, for financial markets. It's, as you said, it's part of a long-term campaign. Of course, we saw Trump trying to bully Chairman Powell when he was at the helm, and then Lisa Cook, and he's continuing to try to pack the board with people who are of his mindset. But he doesn't seem to understand, nor do others in his administration, like Kevin Hassett, that it's absolutely critical not only for central banks to operate independently, but to also have the appearance of being independent. Otherwise, you end up with situations like we saw in Turkey with Erdogan's constant meddling, resulting in all kinds of economic problems. So, Trump will continue to try to pack the board. There's an open president position at the Atlanta Fed that he's going to try to fill. But I think at some point the administration needs to recognize that that investors don't really want Trump having control or sway over monetary policy decisions. They want to leave that to the experts who they know will be focused on price trends rather than any kind of political concerns.
And Brian, it is not just President Trump who's trying to sway the composition of the central bank in the U.S. We're seeing this in Japan as well, where Prime Minister Takaichi is also trying to do the same with the BOJ.
Yes, that's exactly right. She's already now nominated or appointed 2 board members to the 9-member board. So those are 2 reflationists that she picked. And next year we've got the 2 most adamant hawks. Takata and Tamura are set to finish their term. So that'll be a chance for her to do more of the same as she tries to, at least in the minds of the market, she seems to be trying to slow the pace of BOJ rate hikes, slow the process of policy normalization. But she, too, is going to need to understand that the market wants to see neutral people basing their decisions solely on what they see in terms of data and financial market trends, and not on any kind of pressure from outside.
Bloomberg senior editor Brian Fowler, thank you. Now, still a common insight. Former Indian ambassador to Japan, Deepa Gopalan Wadhwa, joins us to discuss the Japan-India summit as Takaichi and Modi move to deepen economic ties and reduce their reliance on China. This is Bloomberg.
Both India and Japan understand the importance of economic security and energy security very well, and therefore we have prepared a joint roadmap today for economic security. This will enable us to strengthen supply chain resilience to strategic sectors such as semiconductors, quantum technologies, and advanced materials.
Japan and India must leverage our respective strengths to become stronger and more prosperous together. In the midst of international affairs in disarray, the establishment of such intercomplementary cooperative relationship has become ever more important.
The Prime Ministers of Japan and India speaking after the summit in New Delhi, where they agreed to deepen cooperation in energy, technology and defense. For more on the meeting, let's bring in our politics reporter Sakura Murakami, who joins us from Tokyo. And Sakura, it is an important time to be deepening ties amidst the uncertain geopolitical backdrop.
Absolutely. I mean, for both India and for Japan, the situation has changed drastically in the past year. You know, Prime Minister Takaichi came into power, and that has seen there's been a bit of a freeze of ties between Japan and China in that time. And of course, U.S. President Donald Trump and Chinese leader Xi Jinping met as well. So the geopolitical context has changed very much for both India and Japan, and especially for Japan's side. It's very important to deepen ties with other big economies, with other like-minded countries, with other maritime nations. And India is very important for Japan in that respect as well.
And Sakura, you'd imagine that both India and Japan are actually sending a signal to China.
Yes, I mean, the nuance for both Japan and India is a little different. As I mentioned earlier, that, for Prime Minister Sanae Takaichi, the urgency is slightly different from India. You know, there have been export bans, there's been trade bans, there's been a lot of economic pressure from Beijing on Tokyo, and especially on the critical minerals front, there's a real urgency for Japan to sort of build ties with other countries and diversify away from China. As for India, there's been a thaw in ties between New Delhi and Beijing. They're discussing they're holding discussions on the border, and there's a bit of a thaw in ties there. So the nuance is slightly different, but obviously the context remains the same. And I guess China's ascendancy, China's increasing kind of ambition is a concern for both countries. So there's a common concern there.
Economically, I'm just wondering how much Japan benefits from this deepened cooperation with India. We know that in the past year, about 120 agreements have been signed, in terms of businesses between the two countries.
Yeah, so there's a real rise in interest, like a real spike in interest from Japan Inc. in investing and having a presence in India. And that was on display with as you mentioned, the over 100 agreements that have been signed. You know, last year when Prime Minister Modi visited Tokyo, there was a pledge from the Japanese side, from the Japanese government, that they would encourage the private sector to invest up to about 10 trillion yen over 10 years into India. So that's a huge amount. Both Modi and Takaichi confirmed that was pretty much on track, with India already seeing about 2 trillion yen in investments already in the first year. So that seems very much on track. There's a rising interest from Japan Inc. in investing in India and seeing more business there. So those economic ties are really kind of seeping down, or like trickling down to the business side of things. It's not just the political will that's there.
Sakura Murakami, Bloomberg's politics reporter, thank you for that. Well, joining us now is Deepa Gopalan Wadhwa, a former Indian ambassador to Japan. Ambassador, good to have you with us. How do you read the relationship between India and Japan right now? Are we seeing a recalibration of bilateral relations?
You know, the relations between India and Japan really took off at the beginning of this century. And if you notice, this is the 16th annual summit between the two prime ministers. And what this means really is that we have an institution where the prime ministers of the two countries meet every year. Now, this is quite rare, actually, among countries to do this. So this shows a seriousness of intent in the relationship, that there are convergences, in many areas, as our strategic visions, there are convergences. And I think they are just complementarities in our economies, which we want to exploit to the maximum. And, that is where this path has been leading us. And I do believe that this visit by Prime Minister Takaichi is really another one, sort of another step in that direction as our economies come together and as, our strategic visions converge, both in the context of the region as well as globally.
Both countries have been pretty clear that they want to cut their dependence on China. I'm also wondering if both sides are preparing for a more confrontational China and that, their strategic relations are pretty much indispensable in that calculation.
You see, there is no doubt, and you can look at the joint statement that is issued, that, without really mentioning China, China is very much there in the backdrop. But I would like to make a point that, that is not the sole purpose because of which Japan and India decided to build this, what they call a special strategic and global partnership. Insofar as China is concerned, I think in our threat perceptions, it has a role to play, which is known to everybody. And, in this expanse of the Indo-Pacific, I think what both countries, Japan and India, want are stability and prosperity. And therefore, we need to work together and have a security environment which is conducive to growth. We do see China as a big player here. And what we do try to do is to make sure that all the countries in the region play by certain rules, which also includes China. So there is a China factor. I wouldn't say there isn't. More recently, for example, I think they have been talking about coercion in weaponizing exports of critical minerals or critical technologies. And when they use this as kind of a euphemism, of course, for China, which is there also you will find in the joint statement. So China is a factor, but I don't think it's a sole factor because of which Japan and India have decided to work together.
Do you see Japan and India playing that leadership role among the middle powers?
I'm sorry, I didn't get that.
Do you see Japan and India playing that leadership role among the middle powers, especially in Asia?
Yeah, absolutely. I think something that brings us together really is the fact that we are two large Asian economies. And also that we are two democracies. We see ourselves as, emerging emerging powers who have a greater role to play, not only in the region, but also globally. I think this is the aspiration of both countries. And, that is what, to a large extent, also brings the convergences in our outlook on the free and open Indo-Pacific. So, the free and Indo-Pacific strategy of both Japan and India, you find convergences where we believe as, Asian regional powers that we have a role to play.
Talk to us about the Indo-Japan security cooperation. Where could we see the most realistic gains? Would this be in terms of defense tech or maritime? What are the key areas here?
So security cooperation has been a very important part of this relationship, as I said, in the last 25 years or so. And what this involves really is that, we've established a fairly sort of well-developed a mechanism for joint exercises across the three arms of our military. We work, bilaterally. We work as part of the Malabar exercises, which also involves the United States and Australia. Besides that, there is cooperation in intelligence sharing. There is increasingly, I think, an understanding on both sides that we've got to work more, probably more diligently to ensure that there is also cooperation in the area of defense equipment. We did sign an agreement some 10 years ago on the export of defense equipment. As you know, there's been a change in Japanese policy insofar as exports of defense equipment are concerned. And in that list of 16 or 17 countries where they're looking as potential markets, India is one. Prime Minister Modi, during his one of his interventions, he mentioned that this was the beginning. Production of defense equipment we have agreed to co-develop. So I do believe that security is an important part of our relationship.
Ambassador, I'm just wondering what the implications are for the Quad dynamics. I mean, does Takaichi's engagement that we're seeing right now with India possibly a hint of a more assertive Japanese posture within Quad?
I'm sorry, I'm missing bits of what you're saying. I'm so sorry. I think it's not very clear, the line. Could you just repeat yourself?
I'm just wondering whether Takaichi's engagement with India suggests a more assertive posture for the Japanese within Quad.
The Quad, did you ask?
Yes, Quad.
I'm kind of losing you. The Quad. Yeah, so, yes, indeed. I think we're members of the Quad. We've recently had the foreign ministers, meeting. And I think what is important about the Quad is that there are ongoing mechanisms within the Quad that are working and very much online and on course. We also have, within the four members of the Quad, I think Japan and India and Japan and Australia and India have been deepening their relationship, which also gives us, I think, much more strength to the Quad. And we just had recently the foreign ministers of the Quad meeting in India. So I do believe that, while there may be some, differences in nuanced focus, and insofar as the Quad is concerned, I frankly believe that it is still on course. And I think all the four member states of the Quad continue to be very committed to it.
And Ambassador, what does that mean for India's balancing act between the US and China?
I don't really see that, the Quad, I don't think really saw itself necessarily as something, at least it was not really a security arrangement at any, and they've been very careful to say that. But what they were looking at is to make sure that they were, that the supply chains were there, the resilience of the supply chains and things like critical minerals and critical technologies. And if you recall, during the COVID crisis, they worked together. So I think they have platforms where they do want to look at areas such as maritime security and so on, just among themselves. That's what I'd like to say. And again, as I was saying, I don't think it's necessarily directed against China. China is a factor for sure.
One of the key areas for both countries is actually semiconductors. We know that Japan is ramping up its chip alliances, and Japan is pushing semiconductor manufacturing. What concrete areas for cooperation do you see for the two sides?
So when you look at the areas of focus in the relationship, I mean, they've had a roadmap for economic security. And this economic security roadmap obviously covers a lot. But there is, innovation and technology, there's trade, there's investment, semiconductors, and quantum technologies. They form a very important part of this roadmap for economic security. Another bunch of issues that we are looking at is really, given the turbulence in the world recently following the US-Iran war, is energy resilience. So we've had important Japanese, companies looking at India. There've been MOUs signed. There are investment plans, and I do believe that in the specific area of semiconductors, that we are going to see much closer cooperation between the two countries. Prime Minister Takaichi came with a huge delegation of businessmen, and which is larger than I think we've seen before. And the whole focus has been on how do we realize the 10 trillion yen commitment of investment over the next 10 years, which was agreed to last year during the last summit. And an important part of this, I think, is going to be high tech in areas such as semiconductors.
And for India, what bottlenecks do you see that would stand in the way of its semiconductor ambitions?
I don't really see issues as much as what I would say is that we've got to really work together. I mean, it's really a beginning because, to create a semiconductor ecosystem, it's quite a complex process. And I think, India seems to be prepared right now. If we talked about it 10 years ago, I do recall we talked about it 10 years ago, and maybe we were not quite ready. But also, this has to do really with the global economic environment and, developments that have been there. I talked earlier about, weaponizing of trade by China and some other countries. So I think we will start across. What I do understand is start across the spectrum of technologies, training, OSAT, and so on, which are related to logistics, related to semiconductors. And I do believe that we're looking at a path. And frankly, I see potential rather than challenges.
Ambassador, before we let you go, if I could get you to take a step back and take a look at the shifting global alliances, especially those alliances in Asia, what's coming through to you right now as you see, government leaders making these visits to neighboring countries, establishing new relationships or tweaking the old ones?
You're talking about alignments, is it? Was this a question?
Yes, that's correct.
But, we're really talking about, there exist convergences already, as I said, in the strategic space between India and Japan. These have been well recognized, and that really is the foundation of the relationship between the two countries and the growth of the relationship that we have seen the last 2.5 decades. And, realignments, what I would see is I think we would look where we could work together in areas of critical importance to us, which would be, as economic security being one, energy resilience being one. I think as part of this, when the discussion, there was also talk about, where we work together in the area of LNG supplies. Both of us are dependent on LNG supplies. There has been actually, a disruption because of what has happened in the Middle East. So I think the alignments probably will be more economic than anything else.
Ambassador, thank you so much for your assessment today. Deepa Gopalan Wadhwa, India's former ambassador to Japan. It is 11:46, 2 minutes past the open in India. Let's take a look at how the markets are doing, coming online just as the rest of the region rebounds after 2 days of tech-led losses. India up for a third day, in fact. Sensex up by 0.6%. We're seeing gains pretty much across the board. The Nifty IT index leading the pack up by more than 2%. And in terms of the currency, we're seeing the Indian rupee trading at 95.1750. It is up by 0.2%. Now, this 4th of July weekend, New Yorkers may be getting front row seats to Taylor Swift's biggest love story yet. Sources tell us the billionaire pop queen and NFL star Travis Kelce are expected to host a celebrity-started wedding celebration at Madison Square Garden. Everything you need to know coming up next. Keep it here with us. This is Bloomberg. Welcome back, and here's a quick look at some key upcoming events as the week draws to a close. On Sunday, OPEC Plus will hold a virtual meeting to review their oil production policy. Tuesday marks the start of the NATO summit in Ankara, Turkey. We'll also get a central bank decision from New Zealand and inflation numbers from China. But ahead of all of that is what some people are calling the showbiz wedding of the century. Sources tell us that Bloomberg love story singer Taylor Swift is finally getting her very own Marry Me Juliet moment, trading the heartbreak anthems for a happily ever after as she ties the knot with NFL star Travis Kelce. Avril is with us for more. And Avril, I mean, they say this wedding is going to be even bigger than Charles and Diana. So it's going to be huge. You can expect what? Pink carpet for VIPs, Swifty spritz, and that's just the basic. It's going to be huge.
Yeah, and it's going to be expensive, I think, right? There are some estimates out there of what, $20 million, and then for venue alone, I think the cost is about $5 million. Not to mention how much is going to be spent on security. We're already seeing security tighten around Madison Square Garden at the moment, right? The flower budget is something like $500,000, and then I think the ring, at least 10 carats, $650,000, and I think
that's it.
That's it. not expensive enough. I mean, I think if anyone can afford a wedding like this, it's this power couple, right? They've been spending years, building up this empire of theirs that spans sports and music, and this wedding really stacks up against the more expensive ones that we've been seeing recently, including last summer's one between Jeff Bezos and Lauren Sanchez. So,
but the thing is, you got to think about the multiplier effect. Yeah. I mean, we talk about how her Eras tour generated $4 billion alone for the U.S. economy.
Yeah.
And this wedding could generate something like a micro boom within the economy as well. I mean, there is that multiplier effect.
Yeah, and this is coming off summer where New York has been very busy, right? You think about the Knicks and how that kind of raked in, $380 million in economic activity, and then the World Cup, right? $3.3 billion between New York and New Jersey. I think Mamdani will be quite happy. And also, he was the one, I think, that sparked the speculation in the first place that this wedding was going to be happening. So I think
Madison Square Garden is the place to be, right? I mean, you can expect lots of fans wanting to be close to her and talk about merch. I mean, I'm just thinking about the potential this wedding is going to generate, right, and for the economy.
I think to your point about, what we saw already in an Eras tour, that was just a prelude of what we can see this time around. And also the social impact, right? Because true to her brand, when you think about how on the Eras tour, she was, donating as well extensively to charities, food banks, to the tune of millions. This time around, we're hearing, $26 million to local and national charities. So her social impact, and dare I say, the economic impact of Taylor Swift as well.
Who needs rate cuts? You just need a wedding by Taylor Swift and Kelce.
The activity, right?
Exactly. But the thing is, not to be gossipy of anything, they're married already, right?
Yeah, they might have already tied the knot in Nashville, Tennessee. That's what we're hearing, at least.
All right, Avril, thank you so much for that. Well, that's one to watch out for this weekend. Before we go, here's a look ahead to next week. Tata Consultancy Services CEO K. Krithivasan will be joining us to unpack the quarterly earnings of India's largest software services exporter, with the sector under relentless pressure from the growth of AI. And that is it for Insight. Horizons Middle East and Africa is up next. Keep it here with us. This is Bloomberg.